I think that there's so much more transparency in the crypto asset world.
Working on a variety of different things, saying that it increases transparency, like Cathie Wood said, that you don't need a middleman, you don't need a toll collector.
I think that the movement towards DeFi, which is really taking middlemen out of the financial services sector, taking the toll collectors out.
Right now, it's finally happening to finance. Yeah, finance is joining the 21st century.
I see such negative sentiment out there, especially when it comes to valuation and longer time horizons, investment time horizons. I actually feel a little more comfortable. I like bad news and maybe news that's not, the discounting is worse now than the news actually will be. I actually feel better in that kind of environment for our strategies. I don't think we're in a bubble, which is what I think many bears think we are. In a bubble, and I remember the late 90s, our strategy would have been cheered on, rah, 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 go get them, right? And you remember the leapfrogging of analysts making estimates, one higher than the other, price targets one higher than the other. We have nothing like that right now. In fact, you see a lot of IPOs or SPACs coming out and falling to earth. We couldn't be further away from a bubble. And the reason for that is the innovation around which we have centered our research. These 5 platforms, DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology, are barely off the ground. The seeds for all of these platforms were planted in the 20 years that ended in the tech and telecom bust. And ended in tears, and there's a lot of muscle memory around that. But that's not what's going on right now. The seeds planted back then are beginning to flourish now, and it's just beginning with 5 platforms involving 14 different technologies, all of which are about to experience S-curves and feed one another's S-curves. I don't think the market's ready for this. That's what I meant. We've dedicated our research and investing to innovation because we think we've never been at a more provocative time for innovation in history. I actually think it's more of a macro call. When I read the bearish analyses, they seem to be centered on inflation and interest rates going higher, which will kill valuations. And if anything, as you mentioned, Carl, we're focused on the deflationary forces that are building up in the economy. And I think that's going to be the shocker out there, that deflation is the greater risk now, not inflation. And not all deflation is bad. There's really good deflation associated with these technologically enabled platforms. They follow learning curves, which are characterized by declining costs and prices, and enables more and more sectors to have access to these powerful new technologies. So that's good deflation. The bad deflation is going to be associated with companies who paid too much attention to short-term oriented shareholders who wanted their profits now, wanted their dividends now, and did not want companies to sacrifice short-term profitability in order to capitalize on some of these massive trends that we see building. They are going to be stuck with obsolete products, and yet in the meantime, they've leveraged up their balance sheets to buy back sales and satisfy short-term oriented shareholders. How are they going to service that debt? They're going to have to cut prices of these products and services that are not going to be as popular in the future as they have been in the past. And then the third source of deflation, which is really starting to come through now in a noticeable way, started in mid-May, when lumber prices broke. We're seeing commodity price deflation. We've gone from, lumber prices have been cut to 1/3, less than 1/3 of their peak, 1711 to 500 right now. You've got copper down roughly 15%, 15 to 20%. You now have oil down nearly 15 to 20%. And I think the cream of the crop here, and the reason this may be happening and may accelerate to the downside, is the dollar is going up. And that, of course, might be associated with what's going on in China. Well, we have never said the Chinese names are uninvestable. What we have said is because of the social engineering, it seems, or re-engineering that's taking place in China, that the valuations associated with these companies are damaged, and we don't think they're going to go up anytime soon. Linking to the dollar to China, what we're saying is it has been a capital reallocation away from China to, you might say, the dollar's a flight to safety currency. You might say Bitcoin is a flight to safety currency as well. Both have done well recently, and I would link that to China in some measure. In fact, there's an article today on Bloomberg about the inability of the Chinese population to get, as they are leaving the country, to get their retirement funds out. That's pretty daunting, I think, for those of us in the asset management world to consider as we're trying to figure out, is China investable? The one thing I will say is China wants to win. The only way they're going to win is if they embrace innovation as aggressively as, or more aggressively than any other country. And they're trying to do that, but I fear for them that becoming more insular is going to harm their speed in terms of innovation. So, we're weighing this back and forth. And I would say nationalizing an industry like the online education industry that's going to sear our memories for a long time. That could happen to any industry. Well, we don't know what the talk in the boardrooms is, and we also don't know what the dialogue between those companies and the government is. I know we can tell just by looking at what Tesla is doing in China that it is listening very closely to what the government is saying. Safety is paramount, and it is taking more precautions, I think, than might otherwise have been the case. And I think the other side of this is China wants to manufacture very high-end goods. It does not want to be considered the commoditizer of the world. And so I know that Tesla, Apple, Nike, they're all exporting from China, which says something about China's manufacturing prowess. And if you are listening to President Xi Jinping these days, he's saying we need to accelerate our movement up the stack in terms of quality and design when it comes to manufacturing. So I think they are serving the Chinese government's purpose in some way, and the labor costs still are much lower in China. I think that there's so much more transparency in the crypto asset world than there is in the traditional financial services world. That's where I'll start. But I think that the movement towards DeFi, which is really taking middlemen out of the financial services sector, taking the toll collectors out, cutting costs for traditional financial services companies, and creating many opportunities for new greenfield opportunities for other companies. I think it's this whole space is, the vanguard of innovation, the likes of which we have not seen before.